the Mastery Mindset podcast channel. The Wealth Series. Master your mind and unleash your potential. Hello everyone, and welcome back to the Mastery Mindset podcast channel. Today we're delving into the fascinating world of optimal asset allocation strategies. Now, I know this might sound a bit intimidating, but trust me, we're going to break it down in a way that's easy to understand and apply in your own financial journey. So, whether you're just starting out in your career or well into it, this episode is for you. Alright, let's kick things off by delving into the foundation of asset allocation, understanding different asset classes. This is the bread and butter of building a solid investment strategy. Now, don't worry if finance lingo makes your head spin, we're going to break it down into plain English. When we talk about asset classes, we're essentially talking about the different categories or types of investments. Imagine your investment portfolio as a trio of essential players: stocks, bonds, and cash. These three form the cornerstone of your financial game plan. Think of stocks as the go-getters in your portfolio. They're like the risk-takers, the entrepreneurs of the investment world. Just like investing in a startup, stocks have the potential for high returns, but with that comes a bit more uncertainty and risk. It's like riding the roller coaster of the market. On the flip side, bonds are like the steady friends you can always rely on. They're the ones that pay you interest regularly, providing a consistent income stream. Bonds are more like a stable government job. They might not have the thrill of a startup, but they offer security and predictability. And then there's cash. Your safety net in the financial world. Imagine it as the emergency fund that's always there when you need it. Cash might not earn much in terms of returns, but it provides peace of mind and immediate accessibility. It's like having money in hand for unexpected expenses or opportunities that may arise. So, in essence, understanding these asset classes is like knowing the key players in your financial team. Each has its unique role, and by strategically combining them, you create a well-rounded and resilient portfolio that can weather different market conditions. Now, let's move on to how your personal risk tolerance and time horizon play into this dynamic mix. As we continue our journey through the world of optimal asset allocation, let's dive into a crucial aspect: understanding your risk tolerance and time horizon. Think of it as getting to know your own financial personality, because, let's face it, each of us has a unique approach to managing money. How much risk are you comfortable with, and what's the timeline for your financial goals? Imagine you're planning a road trip. Your risk tolerance is like deciding whether to take the scenic route or stick to the more predictable highway. Are you someone who enjoys the thrill of unexpected twists and turns, even if it comes with a bit of uncertainty, or do you prefer the smoother, well-paved road? Now, let's talk about your time horizon. The length of your journey in the financial landscape. If you're in it for the long haul, like a cross-country road trip, you might take a few detours along the way without stressing about it. Those detours could be the market fluctuations or changes in your financial goals. On the other hand, if you're on a shorter journey, say a weekend getaway, you might want to stick to the more direct route, minimizing the potential for surprises. In the same way, understanding your risk tolerance and time horizon helps you tailor your investment strategy to match your financial journey. It's about finding that sweet spot where you're comfortable with the level of risk, and your investments align with the time it takes to reach your destination. So, buckle up as we navigate through the twists and turns of risk and time in the next leg of our financial adventure. Alright, folks, let's add some flavor to our financial feast with a powerful ingredient: diversification. It's not as complicated as it may sound. In fact, it's a bit like creating a well-balanced meal, but instead, we're talking about your investment portfolio. Mixing different assets is the key to spreading risk and increasing your chances of delicious returns. Imagine your investment portfolio as a buffet spread before you. Now, imagine if that buffet only had one type of dish. Let's say, pizza. As much as we all love pizza, having it exclusively for every meal might not be the healthiest or most satisfying choice. Similarly, in the world of investments, putting all your money into a single asset class is like having a one-item buffet. Now, consider the magic of diversification. Picture your portfolio as a diverse buffet, offering a variety of dishes. You wouldn't fill your plate with just one type of food, right? You'd want a bit of this, a bit of that. Maybe some stocks, bonds, and a sprinkle of cash. This diverse mix helps ensure that if one dish doesn't quite hit the spot, the others are there to balance it out. So, think of diversification as your secret recipe for financial success. It's about creating a tasty mix that not only satisfies your appetite for returns, but also ensures that your investment journey remains flavorful and resilient. Now that we've seasoned our portfolio, let's move on to the importance of keeping it in check with our next topic. Now that you've crafted your investment garden, it's time to talk about tending to it through the art of rebalancing. Setting up your portfolio is just the beginning. You need to keep things in check, just like you wouldn't drive your car for years without a tune-up. Imagine your investment portfolio as a beautiful garden. You've planted various seeds. Some have blossomed into vibrant flowers, while others have grown into sturdy shrubs. However, over time, you might notice that some plants are growing faster than others, disrupting the harmony of your garden. This is where rebalancing comes in. Rebalancing is like being the diligent gardener who trims the overgrown plants and gives a little extra care to those that need it. By doing so, you maintain the beauty and balance of your garden. Similarly, in the financial world, assets in your portfolio may grow at different rates, shifting the original balance you worked hard to achieve. Rebalancing involves selling a portion of the overgrown assets and redirecting that money to the ones that may need a little more attention. It's a proactive approach to ensure that your portfolio stays aligned with your financial goals and risk tolerance. So, whether it's pruning your garden or rebalancing your investments, the key is to maintain that delicate equilibrium for sustained growth and stability. Now, let's shift gears and explore the different approaches of tactical and strategic asset allocation in our next segment. As we navigate the diverse landscapes of optimal asset allocation, let's pull over and discuss two distinct approaches. Tactical and strategic asset allocation. Remember, it's not about one being inherently superior to the other. It's about finding what suits your financial goals and preferences. Consider it as planning a vacation. A strategic approach is akin to having a meticulously detailed itinerary. You know where you'll be, what you'll be doing, and even what you'll be eating at every moment. It's about careful planning and foresight. On the flip side, a tactical approach is more spontaneous. It's like embarking on a journey with a general idea of where you want to go, but leaving room for unexpected detours and surprises along the way. Both strategic and tactical approaches can lead to a fantastic trip, but it truly depends on your personal style and preferences. The same principle applies to managing your investments. A strategic asset allocation involves a carefully crafted plan, considering your long-term goals, risk tolerance, and market conditions. Meanwhile, a tactical approach allows for more flexibility, adjusting your portfolio in response to short-term market trends. Ultimately, the choice between tactical and strategic asset allocation is a matter of aligning your investment strategy with your unique financial journey. So, as we approach the end of our financial expedition today, remember to reflect on your own style and preferences when it comes to managing your assets. Now, let's steer towards the conclusion and summarize the key takeaways from today's exploration. As we wrap up today's episode, remember that optimal asset allocation is not a one-size-fits-all solution. It's about finding the right mix that aligns with your goals and comfort level. We've covered a lot today, from understanding asset classes to the importance of rebalancing. So, take a moment to reflect on your own financial journey and see where these strategies can fit in. Thank you all for joining me on the Mastery Mindset podcast channel. If you found today's episode helpful, don't forget to hit that like button, share it with your friends, and subscribe for more valuable insights. I'd love to hear your thoughts in the comments below, and remember, your financial journey is a marathon, not a sprint. Until next time, stay curious, stay invested, and stay on the path to financial mastery.